Tariffs and the economy. We are watching China and the trading situation between the Chinese and the U.S. after President Trump's trade truce with Beijing at the G20 conference in Argentina last week. Those are not the only tariffs we're watching. On Sunday Morning Futures, I spoke with National Trade Council President Peter Navarro and asked him about the steel and aluminum tariffs. Is there any reason to believe the tariffs on steel and aluminum go away over the near term?
So, Maria, look, there's a lot of false narratives out there where they're trying to beat back the tariffs, but the tariffs have been growth-inducing and investment-inducing, productivity-inducing. The beauty of the Trump economy, Maria, is that all of the structural changes that the president is putting in, from corporate tax cuts to deregulation, that allows growth-inducing, deflationary growth, stimulates investment, productivity, and wages. That can go on for a long time.
Joining me right now to talk more about that is the White House Council of Economic Advisors Chairman Kevin Hassett. Kevin, it's good to see you this morning. Thanks so much for joining us.
Great to be here.
And we know that these markets have been incredibly volatile. What is your take on the impact of tariffs, Kevin? Because at this point, you're talking about worries over input costs going up and profit margins getting squeezed. That's part of the worry over growth slowing down. Is it because of the tariffs?
Right. You know, I think you're exactly right to point to the worries you mentioned in the opening about Brexit. You know, where we are right now is that we're in the middle of a negotiation that's a very high-stakes negotiation with China. And President Trump, just as he did with USMCA and with Korea, is determined to get a great deal for Americans that's great for us, great for the Chinese, great for global growth. And if he does, markets are going to celebrate. But in that period of uncertainty, when the negotiations are going on, as we've seen with the previous new NAFTA or USMCA deal and with this deal, during those negotiations, the uncertainty can be a little unsettling for markets. That's something that's really been around as long as you and I have been.
Yeah, I totally understand that, and I understand what the president's trying to do with China. I think it's very good. The issue is tariffs elsewhere, tariffs on our allies. You know, the business sector is watching these tariffs closely as far as the impact on input costs and on profit margins. Is there a way to keep working with China and not have tariffs on the rest of the world, or is that not feasible?
And in fact, if you go back to the G7 meeting, the president and Larry Kudlow laid out exactly the path that you're talking about. If a country came to the U.S. right now and offered us zero tariffs, zero non-tariff barriers, full access to their markets, the president would take it. That's ultimately his long-run objective. But we come into the world where there are all these countries that have tariffs that are 5 times bigger than the tariffs that we have on them, if we have any at all. And previous presidents had tried to talk them down and not gotten them anywhere. And so President Trump is really serious that if people don't come down to us, then he's going to take some measures like the steel tariffs to make sure that they understand that we want fair and reciprocal trade. And if we don't get it, then we're going to stand up for ourselves.
And there still are tariffs in place against Mexico. And we just have this newly signed USMCA agreement, the United States-Mexico-Canada agreement. There's an op-ed in the Journal this morning by the Club for Growth president, David McIntosh, and he titles it, "No New NAFTA Until Tariffs Have Been Listed." In it, he writes this: now that the USMCA has been signed, there is no reason for the tariffs on steel and aluminum to remain in place. Congress should not consider the USMCA legislation until after the tariffs have been removed. Your reaction?
Well, I think that Congress should accept the USMCA. It's a great deal. It's got lots of great measures. I know that this, steel and aluminum and those parts are things that are going to be negotiated, still negotiated with Ambassador Lighthizer. But the fact is that the deal itself is the first really modern 21st century trade deal. And of course, Congress should pass it. It's got so many protections, from labor protections to even things like ocean litter, that I think it should be a layup to get through Congress.
Yeah, I know. But there are a number of Democrats, Kevin, that have told me directly, I'm not going to sign it in its current form. We want more representation of more industries. We don't want it to be more just about the auto sector. Is the president prepared for what's to come in the new Congress when they balk at this USMCA until he makes changes? Is he going to make changes to USMCA, even though it was signed?
Well, I'm not going to get ahead of the president on negotiation. He wrote the art of the deal after all. But, the good news is that, he met with President Xi. Look at all the progress they made. And tomorrow he's meeting with Leader Pelosi and Leader Schumer. And I'm sure, as in the past, that he'll start to move things in a positive direction.
Yeah, that meeting's going to be important to watch because Nancy Pelosi doesn't want DACA attached to anything. And she's in her own fight to get the speaker's role. So she's not going to vote on anything. She just wants to get her speaker's role. Then there's the issue issue of growth. Let's talk there. Are you expecting the economy to slow down from current levels within the next 2 years, Kevin?
Not really. You know, a year ago, Maria, on your show, I said if we pass the tax cuts, then growth this year will be 3.1%. You remember?
Yes, you did.
If we get 2.5% in the fourth quarter, which it looks like we will, then the year is going to be 3.1% or within a tenth or two of that. And so if you've got a few-year forecast and you get the first year exactly right, should you change your forecast? I say no. And so I think that we're looking at 3.1 or 3.2 for next year, but about 2.5 for the fourth quarter. And think about the jobs numbers, how strong they were. You know, sure, the top line number, 155, was down a little, but we stayed at 3.7% unemployment. We saw year-over-year wage growth north of 3. And here's my fun fact of the jobs report. If we get above 100 in December, it'll be the first year in almost 20 years where we were above 100 every month in a year. And so we've got very, very strong labor market. We've got GDP surging around 3%. We've got a capital spending boom, just like we said. And so all the fundamentals are strong. I think that the markets are in turmoil because of the uncertainty we mentioned, but also because the Chinese economy is weakening and the European economy is weakening sharply. And U.S. multinationals get about 40% of their sales overseas. And so it's natural for markets to reassess what profits look like given the slowdown in the global market. But here in the U.S., we're doing strong.
You're talking about this year and possibly the next couple of quarters next year. I'm talking about 2020. You know, growth and interest rates has been the topic. Federal Reserve Chairman Jay Powell said last month he sees interest rate benchmarks as just below neutral. In terms of rates, you know, we're looking at them creep up. There are many people who say the Federal Reserve is not even going to be able to raise rates as much as they think next year. Like Ray Dalio told me he's not expecting 3 rate hikes in 2019 because things are going to slow down. And you know that if we see a slowdown of growth in 2020, that's exactly when people are going to be headed to the polls to re-elect Donald Trump. I guess, and is his re-election in jeopardy? He's the first business president. Is it in jeopardy if the economy slows down in 2020?
No, look, the bottom line is that a capital spending boom like the one that we're in usually takes 3 to 5 years, and capital sort of gives to GDP twice. You get GDP when you buy the machines, and you get GDP when the machines start producing output. We've had about a 10% increase in capital since this time last year, and that should continue if it's a normal capital spending boom for 3 to 5 years. And the good thing about the supply side shock that we get from the tax cuts and from the deregulation is that it puts downward pressure on prices. I wouldn't want to give the Fed advice, but you know, we said last year we'd have 3% growth, and by the end of the year we'd have decelerating inflation because of the capital spending boom, the increase in supply. And that's exactly what we're seeing in the data.
Well, we did see a capital spending boom right after you did your tax cut plan, and that obviously moved the needle on growth. But in the last couple of reports, it's a little sketchy. Do you think business managers are sitting on cash again over the uncertainty over tariffs, or do you think business capital spending has in fact kept up?
No, it's gone up 4 quarters in a row, and it went up enormously, you know, fourth quarter last year because the tax cuts were retroactive, and then the first couple quarters. Third quarter, it sort of took a pause, but fourth quarter, it'll pick up again. I think that the bottom line is that capital spending is something that takes a while to adjust. So if you build a new factory, then you got to order the machines, and you know the machine tool companies now are all close to capacity.
That makes sense.
So it's natural for these things to go up and to pause.
Kevin, it's always a pleasure to see you, sir.
Great
Thanks so much.
Great to be here, Maria. Good morning.
Kevin Hassett joining us at the White House.